Bitcoin is doing a whole lot of nothing. It's going sideways. I'm going to show you the exact key levels and indicators that I'm using to try to determine, is continuation either up or down going to happen anytime soon, or is Bitcoin just going to bounce around in roughly a 7% range, which in my opinion is very probable as of right now, until the Wednesday of next week when high impact economic data comes out. So through there, until that point, so we might have a whole week of nothing. But in this first portion of this video, I'm going to show you why it looks to be like that and the exact things that will happen when that becomes improbable. So it's almost like musical chairs, right? So imagine a chair here, right? And people are going around it, and there are only two people left, right? For VIPs, I think I did this in a VIP call yesterday, but at any moment, the person behind the chair, the probability of that person winning is low because they're behind the chair. You know, two people going around the chair and the music stops. The first person to sit wins, right? So the probabilities of who is going to win changes. It's a fluid change, right? On Bitcoin, it's not quite as fluid as two people left in musical chairs. The probability is changing at any moment, but I'm going to give you those exact key levels so you can know when probabilities are changing, whether we're going to keep ranging in a 7% range or break out to our 21K target or break down to roughly 19K target. So let's go get some Bitcoin. All right, if you want to take a quick snapshot of all of the items in my screen and the exact levels, they are perfectly labeled. I am on the, well, let me go to the 15-minute chart. These are all of the things that are in play for immediate price action. All right, they are labeled so I don't have to read it to you. And the only thing for new viewers that I might go over is, how am I on the 15-minute chart with daily EMAs and a weekly EMA? I use what's called MTF EMA. And for my Discord and Cryptillion YouTube tiers, I've given a heads up on which indicators for. There are multiple that you could choose from, but which ones are pretty good to use. So this is what is in play right now. These are the main things that are going to essentially be the bumpers of price. So when price touches it, something's going to happen. But between bumpers, it's just nothing significant is going to happen. Does that make sense? So I'm showing you Bitcoin's bumpers. Specifically, how it reacts to them, that is in question. However, you just essentially, if you're below something, it's likely you're going to hit your head on it until you form higher lows and bust through, right? So these are the bumpers in play for only immediate price action. However, here's the thing, though. This might be all that happens for an entire week. So I think Bitcoin might stay between the October candle open, maybe a fake out just below it. So let's say between, just like a quick fake out below, maybe 19.3, all right, up to the weekly 10. And that's about a 7% range. And the weekly 10 is coming down, so this range might be shrinking. But I think it'll still maintain a 6 to 7% range through Wednesday of next week. And this literally, if Bitcoin is boring, these are your bumpers and why. Clearly labeled. And so therefore, on the short-term price action, because I think it's just going to bump its head and then maybe, bump its head on this and bump its head on this line and bounce off this, I'm not going to give you exact, what is it going to do for 7 days if it stays in here? I'm not going to do that because honestly, I wouldn't be able to guess. However, I do know that these are the main items to look at over the next 7 days, unless the probability of a 7% range breaks and it turns into being more probable of something else. So let me show you what that is and the targets it would go to, whether it breaks up or down, either within 7 days or after that 7 days, right? Okay, so within 7 days, the moment that boring range becomes improbable and therefore continuation up or continuation down becomes more probable is not just getting above the weekly 10, but as returning viewers, you already know what I'm going to say, but going above it, coming back down to it, right? Here, actually, let me do it like this. You got to go. Again, I cannot stress how important this is. It's not hourly closures. It's not 4-hour closures. It's not a daily closure. Weekly closure, maybe. But you're looking for, even on the 1-minute chart, doesn't matter. Goes price. I hate that. I don't like that color. Here we go. Price goes above it. This is how price will move. So I'm literally showing you if the probabilities flip, this is what you'll see, literally, on small candles with the weekly 10 on. It'll go above it. It'll come back to touch it. How many times it touches it, I don't know, but it'll touch it. Might even go below it, form some higher lows, and then when it takes out that high, when it takes out that high, the first high it makes as it gets above. So essentially, to get above the weekly 10, you usually get some oomph, like some volume, some more, some bigger buy pressure, and it creates an initial. It's like the first high, right? But then it comes back down to test it, and so at this point, ranging is still like it's probably 50-50 at that point. Like it'll just fall back into its range. But it's when it takes out the original high it makes as it gets over the weekly 10 EMA, that's when staying in this range becomes way improbable, but not until that point. Now, if it comes up here and bounces here at that exact snapshot in time, yeah, it might be more like a 50-50. It becomes, more improbable that it comes back down to the range, sure, but you don't have a clear probability to our next upper target, which is 21K, and again, I'll show you why, until exactly this happens. You don't even need to look at closures or anything. You could have structure of a 1-minute candle, and this is what it will look like with a very, very high likelihood. There are some exceptions. You could consolidate under it and then bust above without coming back to touch it. In rare cases, like less than 1 in 20 times that price interacts with the weekly 10, right? So sometimes it does it just goes way above and doesn't come back for a while. But it's probably even less than 1 in 20 of times it interacts in a fresh manner with the weekly 10. So this is what you're looking for, specifically as it goes above here after touching it. So this moment in time right here. I can't stress that enough. And the same thing, but inverse applies to breaking down. Okay? It's breaking down. But I'm on the topic of breaking up. So that's what we're looking for, how price will behave on the weekly 10 should we break up. Now, I have to go to a different Bitcoin chart, and I want to show you where price will go if it does break up in that fashion and why. All right? So let's take off all this stuff, and I will go to 2-day chart. I will take off my macro channel, and looking sexy. Yes, we are. Okay. These are origin lines. Returning viewers, I'm boring you, I know, but just new viewers, this is why you hit the like button and you subscribe to my channel, because you're not going to see Bitcoin. So, you're not going to see this stuff anywhere else. These are origin lines. You'll only find them on my channel because I made them up and they work. I don't know why they work, but I know they do work. All right. And so what's happening right now is this line right here, price went under this line. And it's now going to hit its head on it. But in order to do that, it's probably going to race up to it after it gets above the weekly 10. So I'm going to zoom in. So this is 2017 top. Back in 2017, 20K top. This is 64K top, 69K top, $1,300 or $1,200 top in 2013. December 2013, 2017. Okay? All right, so we're going to zoom in way into here to see what's going on and why 21K is that target after you see price behave like I just showed you with the weekly 10, because it's an extremely high likelihood that's how it's going to move. It's not guaranteed, but it's very high likelihood. All right, here we go. So let's zoom into this bad boy. I will probably go to what time frame? Yeah, the 1 hour looks pretty good. Do I have a channel on here? Channel macro? No, that's not in play. All right. And I will throw on the weekly 10 EMA on the 1 hour chart. So a lot of times, even without the origin line here, so even though we're focusing on this in general on this chart, okay, that's where it's going to go. And I'll put a price tag on it so you can see that it's about 21K, maybe 21.1, something like that. So 21.1, whatever, 21, just over 21K. But a lot of times the way that price likes to interact in a fresh manner, which means it's gone way below this red. So this red line is the weekly 10, right? After it goes way below it and is really far away from it, its first attempt to get to touch it, it often likes to do what's called a failure pattern, just like this, which means it didn't get rejected because it did go above it, as you see here. This is a very aggressive. This was clearly a whale play, very obvious. But it's still a failure pattern. It went above it, and when it came back down to interact with it, it couldn't hold it. And if you zoom in even more, like to the 5-minute chart, hopefully it lets me go back that far. Come on, baby. Yes. Okay. So this is what I'm talking about. You'll be able to see on very, very small candles. Look, every time so perfect rejection, got above, came back below, did not use the red line as support. Okay. Here, it did use the red line as support, made a higher high, looking good. But when it came back to test it, so I'm going to zoom way in. So at this moment in time, right here, you had this as support, the weekly 10, on very, very small candles. You took out the original high, and it looked like it was going to go up. Like, because this is what, it looked like it. But why is this not the same thing as what I mentioned last time? Because the first local high, it did not use this as support. So after it makes a first local high, what makes it probable for it to go up after it passes this is if it sticks its landing on the red line. But here, because it went above it and came back below on the first move, right? Then anything else that happens after that, you got to be a little skeptical, right? Because remember when I drew that earlier, I said it's got to go back to the line, use it as support, right? Okay. So let me make myself small. All right. But this is what a failure pattern looks like on small candles. It just hovers around it, can't really use. So look, all these other candles got above it. When it came back down, did it use the red line as support? No, it used something else down here as support, like something that's not there. And it got above it again, came back down. Did it use the red line as support? No. So it looked very obvious to me at this time, during this on small candles, that whatever it was going to do is going to break down. And it wasn't going to stay above the weekly 10, right? Okay, so the same idea, like a similar situation, and actually, Bitcoin often interacts with the weekly 10 on its first approach to it after a long time. Very similar to this. Not quite like tanking afterward. This was a trap. But that we covered on my channel as one of two most probable things to happen during then. But it's not always this trappy, but in general, it goes above, can't use it as support, and comes back down. And if you do a failure pattern, so given that that's common, right, on its specifically first attempt, price touching that red line or weekly 10 in a long time, it's common to do a failure pattern. But if it does do a failure pattern, what will it reach up to touch just above it? That origin line that we were just talking about. So it's even without the origin line there, somewhere around 21K would be fairly probable target even without the origin line, because it's the first time price has interacted with this red line in a while. So therefore, you just won't get above it on your first pass. Like your first attempt to skateboard, you're gonna fall on your ass, right? Like you're not gonna succeed your first try. And so this is Bitcoin's first try in a long time. All right, so it's probable, you got a fairly decent edge just because of that alone. But on top of that thought, and so I'm building up a case why 21.1 is a freaking good target. Should you see Bitcoin break out, right? Okay. So as I mentioned earlier, but if it does interact with the weekly 10 in this way, it might be a higher up failure pattern that reaches all the way up to here in order to touch the origin line, and then when it comes back to interact with the weekly 10, it just breaks through. There's a lot of resistance here. A lot of resistance there. In addition to that, people who trade more patterns, so they are going to be looking at a very simple trend line. Let's make that trend line more visible, Tim. Hey, look at this trend line. Where is that? Exactly at the origin line. And a lot of people who don't follow my channel, they don't know what origin line is, they don't use EMAs, they just use shapes, well, they're going to trade, they're going to become sellers there. So when, and in order to have a better probability of something happening, the way I like to put it is like a safe trade. You know, no trade is safe, especially if you're not using risk management. But to get a better edge, a better probability on your hand you're playing, whether you're going long or short, the moments that are the best probabilities of winning are when, so what I'm about to say is very important, okay? For new viewers, like, you're not going to hear this anywhere else on the whole internet, and it's very valuable. The most probable trades are represented by multiple groups of people who trade differently, who see the same thing for different reasons, who become sellers or who become buyers at the same point for totally different reasons. And that's what's that if it gets to 21K, which it might not, right? Because I think it just might go sideways. But if it does get there, it's a pretty good target for a strong pullback. Will it, am I saying it's going to drop down to, 12K after that next leg of capitulation? No. But it's a very, very clear target for all these reasons, with a very, very likely, high likelihood of some form of pullback, which could result then in a higher low, and then it busts above there, 2 weeks later. That's possible as well. But that would be, on this time frame, we're looking at 1 hour chart, trying to get an idea of the next, just the month of October, like how price is going to move this October. If everybody was talking about October, right? This could, October might happen only until the October 15th. And once it hits there, it can't keep it up. And then the candle turns red, right? And on that first chart, I had 2 white lines, and I told you to copy them. These are the only things in play. The bottom one was the October open. And you need that on your chart. You need September's open of the monthly candle. And I had it clearly labeled. So go to the beginning of either this recording, this video, or the stream. And you need both of those on your chart. They're going to be huge. Because of how, and I'll show you. Here, let me show you why. Because the monthly chart is essentially, this is going to be a monthly candle breakout either way. Like, whatever is going to happen, it's going to be, it has a chance of being pretty big. I don't know if I like it on this chart. Check this out. So you have all these candles just hanging out here. So even though this came from above, but it stopped here, right? Closed here. This, obviously this one opened here, but the next one, August, closed there. So you have this box essentially, right? And then September almost fell off the cliff, but it held on for dear life. And this month is trying to join this party again, right? And what happens is, if October is going to be a red candle, if it is, I'm not saying it will, even though right now I think it's probable that it will be, but I'm saying if, and my opinions don't matter. In the event that October is red, what usually happens before the end of the month when it closes red? Like, just on any time frame, 5 minute, 1 hour, whatever. If that candle is going to be red, what can you assume is probable for at least a portion or a percentage of that candle? It's going to go the other way and make and it'll be, so if you're thinking red, it will be green for some portion of it. And then it comes back down below its open, turns red. And that greenness that was green, it turns into the red wick, which is like this, right? So, and that's called a backfill. So even if this is going to be red, it's going to backfill to some degree, and that could be what this is doing. So now the question is, where are typical? So this is the third layer of why 21K is a really good target. This is the last one. What is a typical way to backfill, with the idea that it's extremely probable that any candle, whether it's green or red, it'll backfill the other way? Maybe not right at the beginning, but sometime during that candle. Some of the more common ones are all the way up to the previous candle's body, which is what this one right here did. All right, let me zoom in a little bit more so we can see this. Okay, a lot of times you get a backfill completely, especially if you have two candles, you know, like you got a couple of them there, like that, but, or I guess three. This is three, but it goes up to the candle bodies of the previous couple, or in this event, a lot of times it goes halfway. So all the way to the body or halfway up the body. And if you look left and you only have a wick, a lot of times it only goes about halfway up the wick if this is going to be red in the end. So what is about halfway? So let's see, about halfway there. What is halfway up the wick? 21.1, the same freaking level. And if you zoom in, multiple groups of people are going to be seeing the same thing for different reasons. And another group of people, they know monthly backfills like to go about halfway up a candle or halfway up a wick, and you got both here. So now you got like 4 groups of people seeing about the same damn thing for totally different reasons. So this month of October, you know, if you're somebody who's saying October, just realize 21.1 around that point it's going to be tough to get over it. And you shouldn't, you know, be chest pounding for October until Bitcoin both gets above that level and uses it as support. Right? But until that happens, it is, I don't know if it's probable, but you don't have a great edge on a green October. Even all the statistics of all previous October stock market, it doesn't matter. This is a bear market. Most Octobers of the stock market were not in bear markets. So you should limit yourself in statistical data to only considering October in bear markets. And therefore, the ratio is not going to be as great. Like, you shouldn't use bull market Octobers. We're not in a bull market, either in stocks or in Bitcoin. So I really don't think that those statistics are even valid. Because the context is different, right? And I don't think, there's no edge until 21.1 is beaten by Bitcoin price. And I'm trying to communicate this because there was a lot of Twitter activity, on reputable accounts or just people in general talking about October, and that might lead other people to, start doing investor buying, DCAing heavy with high expectations, or, you're new to leverage and you think it's just safe to go long and you could get destroyed. I'm trying to help you. I'm trying. So if you're one of those people who have taken action with money and clicking, just realize that moving stops up or taking some profit or all profit until Bitcoin cools off here, that might be a wise decision, whether you're on spot trade or on futures. With the idea that you're totally biased towards a green October, I would cool down that bias once price hits here. Please and thank you. This is not financial advice, but I really hope that this analysis has helped you from a monthly standpoint, October monthly candle standpoint, and the short-term time frame standpoint. I'm not going to go over the lower targets yet because I don't think Bitcoin's going to break down. But if I can do it very quickly before we jump off of here, off the Bitcoin part, there's really no threat of a big Bitcoin breakdown, really until the October candle flips red. So the October open is right here at that point. So right when it crosses it in that exact moment, yeah, it's probably a 50-50 that you're going to break down, but it's not an edge until the inverse of what I told you earlier at the beginning of this Bitcoin portion is true. You make a local low as you pass it, come up here, use it as resistance, and then take out that low. It's at that moment right there. That's when a downside move, a continuation, like below 17.5, or just strong move down, that's when it becomes probable. And the reason that is because a lot of times, people, a lot of liquidity or just people's liquidation points and their stop orders for super high leverage, just normal leverage, a lot of those orders get piled up here under an obvious level. And then the big money, they have their bots and algos that can see that in the order books, and they just go get it and then go the other way. That's why it's not probable until you can determine, hey, it went down and then it took out that low. because until that low is taken out, it's like a coin flip. Which one's happening? If it's an obvious level, does that make sense? And that's your breakdown point, about 19.4, and that is where the October monthly candle started. So I've covered up direction, down direction, and what to expect sideways in a 7% range. All the exact key levels go to the beginning of this video portion. I really recommend you put it on your chart. It's going to help you drastically, and you will see Bitcoin use those as bumpers. I'm telling you, it's exactly what's going to happen, and hopefully that's helpful.